Did you place at least one amongst the 40 crore online orders that Zomato delivered last year? It's a pretty safe bet that you did, given how we've lived in digital caves for nearly 16 months now. And now, are you scratching your head to figure out if you should invest in Zomato's initial public offer, IPO? Because you are attracted by all the sexy labels in social media. India's first unicorn food tech company, first listed consumer internet platform, its market value at 75,000 crore rupees being greater than the sum of the iconic Taj hotels, Oberoi hotels, Leela hotels, and 17 other hospitality giants. You're very tempted, right? After all, there's already a premium of over 10 rupees per share in the grey market. The company is exuding confidence, having increased its offer size by 1,500 crore rupees and its value by 15,000 crore rupees in just 3 months since filing its prospectus with SEBI. You're hearing increasing chatter about large foreign investors planning to write, big checks in the IPO. You're excited. You can hear your heartbeat accelerating. Your palms are sweaty. Should I? How much? Will I even get 100 shares if I put all my savings in the application? But you're also mighty confused because, you're an innocent 20-something who just plunged headlong into the equity game during the pandemic. There was nothing else to do but fiddle on the computer screen all day long. And when your friends began dabbling in shares, bragging about how much money they had made as the Nifty 50 index doubled from 8,000 to nearly 16,000, you could not hold back. Even though your old man always warned you, stay away from 3 things: smoking, drinking, and gambling in stocks. This sattabazi has destroyed so many lives. Never do it. Just put your money in a safe bank fixed deposit. That's what he would say, right? But clearly, he was out of sync with this addictive rush of risk, fear, and greed. Then your little sister, that brainy, curious one who always seemed to know about unusual things happening in our world, she sort of crashed through your reverie and she asked you a stunning question. Bhaiya, tell me, why is everybody going mad over Zomato's IPO? Don't they know that the company is making huge losses? See here, last year it sold food worth 2,605 crore rupees but lost 2,386 crores. I'm scared that you will repeat the Bitcoin mistake. You bought at $60,000 but in a few weeks its value had fallen to $30,000. Please, bhaiya, please be careful. So you dig in a bit more to figure out the intrinsic value of the company. All such food tech operations across America, China, and Europe are making losses. Good, that's good, because that means there's nothing peculiar about Zomato. All of them are also extremely pricey. They are quoting at between 2 to 7 times their annual revenue. Zomato is actually a tad pricier at nearly 8 times, so that's a negative blip. But more worryingly, 4 out of 6 overseas stocks have given steeply negative returns this year. Only DoorDash of America is showing a healthy appreciation. In that sense, Zomato's IPO price is in tricky territory. Finally, you turn to a sage veteran for advice. Sir, what should I do? Use the bulk of my savings to bid for Zomato's IPO? Now, this is what the sage investor says. Son, you can make 2 mistakes in the stock market. You can buy a good company but at the wrong or a high price. Or you can buy a bad company but at a so-called good, so-called low price. You will lose money in both these transactions because it's critical to buy a good company at the right price. Plus, you need to rationally assess your ability to hold equity for the long term, riding the highs and the lows of a business cycle until you make optimal returns. Now, there's no question that Zomato is a consumer internet platform with a terrific growth curve ahead of it. But it's also extremely expensive. It may take several years, perhaps even a decade, for deep value to emerge in the stock. And like Bitcoins, it could suffer through massive massive price swings during business cycles and adverse events. Do you have the financial strength to ride through such volatility? And then you answer, no, sir. I know how scared I got when my Bitcoin investment dropped by half in a matter of days. I'm a middle class boy. I can't handle these violent swings. And this is what the sage investor says. In that case, my boy, leave these volatile investments for institutional investors who have got the ability to hold on for decades, who understand the swift changes taking place in the digital world, who have the equity cushion to top up when prices crash, and then they cream profits, take away profits when prices near irrational peaks. But you won't have the knowledge or the ability or the wherewithal. So my advice would be for you to stick to more regular fare and leave this game to the big boys. For now, why don't you just enjoy the fancy edamame that you order from Zomato?